The Vancouver real estate market continues to defy logic when it comes to real estate pricing here in Vancouver, and there's a number of factors or hypotheses that people have put together as to why that is. I have found an article here that talks about 10 of the reasons why they believe Vancouver continues to defy logic. So we're going to jump into those 10 reasons. I'm going to do a little bit of a commentary as to why I think that problem is. But this problem has been around since the 1980s. There's a very popular clip from CBC talking about Vancouverites who are just frustrating with the housing market, how expensive it is, how they're having to fight for competition into the areas that they want to purchase, and they can't do that. So this is not just an issue that's stemming from the mid 2000s. It's very popular for everyone to get upset about foreign immigration, this money laundering, and yes, those things have happened, but really this has been a problem that has been affecting Vancouver and Vancouverites since the 1980s. So this article from MSN.com right here states 10 ways Vancouver's real estate market defies logic and gravity. So I thought this is perfect timing for this video in terms of what is going on here. We know that Vancouver as a whole, essentially property values have flatlined since around 2022. There has been no real increase or decrease. People have been calling for a bubble to burst here in Vancouver for a very long time, but COVID couldn't do it, inflation couldn't do it, interest rates couldn't do it. So what is going to happen? Is the trade war going to do it? I don't think so. I put a video about that recently, why I don't think that's going to have any impact. But let's go in and talk about some of these reasons why Vancouver defies logic here. So the first one on the list here is empty homes in a housing crisis. The contrast in Vancouver's property market is striking, with a 1.6% vacancy rate in October 2024. While housing demand reaches record levels, in response to public pressure, Vancouver created a vacancy tax program that requires owners to pay a significant percentage of their property value if homes remain unoccupied. City statistics show the tax has motivated some owners to rent or sell their properties, though thousands still remain uninhabited. So this definitely is somewhat of a problem across downtown Vancouver. I think a lot of these entry-level price point homes on the detached side or apartment side of things, I think a lot of those have returned to market. But when it comes to, and if you really look at these areas, on the west side of Vancouver, in Shaughnessy, in Cole Harbour, these are very affluent areas where people are holding these assets in their financial portfolios, and they may not care about having to pay the taxes just because of how valuable these resources or these properties are. And I understand this can be an issue, but at the same time, this is not a place where the average person could buy that house, or even the above average person could buy these homes. These are very expensive properties, so even if they could be returned to housing, we're talking about a small number of properties that most people can't even afford that here in Vancouver anyway. So I don't think it will make as big of a dent in the market. Is it sad to see areas that are uninhabited? 100%. But at the same time, is it sad to see some of these full-on areas uninhabited? For sure, it is an issue. I think if you were really wanting to change things, if you would tear down these homes and you could put up density and you could build townhomes or towers to be able to help with the issues with supply here in Vancouver, then I think we're on track with something. But a lot of these areas, they're designated detached, or likely going to be staying detached for a very, very long time. So I don't think this has as much to play. Is it part of the problem? For sure, but I don't think it's as big a problem as a lot of people make it out to be. Number 2 on the list here, price to income ratio breaks economics 101. Vancouver's median house price is more than 12 times the median household income, one of the highest ratios globally. This ratio far exceeds a traditional affordability measure of 3 to 4 times your annual income recommended by financial experts. Local salaries have not kept pace with housing costs over the past 2 decades. This disparity between income and housing costs continue to widen, creating unique challenges for local buyers. 100%. This is an issue, and I think this is a big reason why property values have stayed where they are and they haven't crashed out. And it's because of the property values. So what do I mean by this? If you have been living in Vancouver for quite some time, if you grew up here, if you have parents and grandparents here who bought properties back in the 60s, 70s, 80s, 90s, early 2000s, they are sitting or have sat on these huge amounts of equity that a lot of people are now in turn helping the next generations. I work over 90% of my buyers, I would say maybe even 95% of my buyers now are all getting help in some capacity, whether it's from parents or grandparents. They've either sold and downsized to help kids. They're taking a home line at credit out against their house to help their kids as well. So it's a weird dynamic here, because these higher property pricing is what is also keeping the market up, because you're getting so much help from parents, from from grandparents, maybe an aunt or an uncle, because they're sitting on so much equity that it is helping people get into the market. This definitely defies logic because, you know, when you look at the household incomes in terms of what the average is around $80,000 here in Vancouver. People can't even get into a condo, let alone a detached home. So how does that work? And it's exactly what's happening in the marketplace, is just people passing down that wealth from one generation to the next to help people get into the properties. Because if you are two working individuals that have decent jobs and all of a sudden you're getting a $500,000 lump sum payment, sometimes more depending on what you're looking at, then those mortgage amounts aren't as big of an issue. We also know that for a lot of people here in Vancouver, that lump sum, especially over the $1 million mark, where you're having to put a more than 20% down. And now with the new changes, the minimum amount that you can put on a $1.5 million property is 20%, and anything above that is also 20%. So it was a huge deterrent for people getting into the market with how much they had to save. But if you can bridge the divide by getting some help from family, this is definitely one of the main reasons why the Vancouver market here is defying logic. The third reason they have put forward is Laneway houses change property math. Vancouver's Laneway housing programs allow homeowners to build small additional homes on their properties, effectively creating two residences on a single family lot. These mini homes can rent for prices comparable to many downtown apartments despite their small size. Laneway houses have become increasingly popular since legalization in 2009. With thousands now built across the city, the program has created a new category of housing that challenges traditional property value calculations. Not really sure what the point of this item is here in terms of defying market odds. It is needed. This is something that can help a lot of people out. I think most people take advantage of this when they're buying a detached property, when they're trying to jump up into that next range in the property categorization to help with offsetting mortgage costs. A lot of these will have 3 residences on just one property. You'll have the main house, a basement suite, and then a coach home, carriage home, whatever you want to call it, laneway house, to help with mortgages. Investors as well, this is a great opportunity to be able to, for the price of one property, get 3 income producing properties on here as well. But I don't think this has really any impact in terms of the Vancouver market whatsoever, trying to defy logic. I think they were just adding this tile here, but you know, laneway homes, some of them you can even sell on the marketplace as well, but this is more so helping with the rental stock. $1 million teardowns. Properties listed as teardowns regularly sell for over $1 million in Vancouver's desirable neighborhoods. These aging houses are often marketed purely for their land value, ignoring the existing structure entirely. Buyers frequently demolish perfectly habitable homes to build new ones, demonstrating the extraordinary value of Vancouver land. This phenomenon has transformed entire neighborhoods and contributed to the loss of heritage buildings. When they say sell over $1 million, I mean, I've sold land-only properties on Vancouver's west side over $3 million for a teardown. This is actually going to help the market in terms of affordability. The biggest reason in my estimation is just overall the lack of supply. It takes forever for buildings to go up. There's so much bureaucracy. And then when you look at some of the finer details in terms of what's going on, there's been such an attention to purpose-built rentals that the province and the Canadian government have wanted builders to do. So a lot of focus for that building has gone to purpose-built rentals. Single-family homes are not really the issues. We know that there's over a 40-year low on permits for single-family homes. They're now all getting torn down because of these land use changes from the province to make way for multiplexes, triplexes, duplexes, things of that nature, even condos depending on where they're at. So this actually, I wouldn't say it defies logic. This is one of the things that can help with affordability, because if you can bring more product to market, you can start to water down inventory. If you water down inventory, pricing is about to drop. But because we have such a lack and there's still so many people that are wanting to move here, it hasn't really done that much in terms of the pricing. And that's why we've had that flat line. We've been very fortunate in Vancouver not to see that dip because of these supply issues. But actually these $1 million teardowns is really what's needed. There's lots of underutilized zoning in Vancouver, and we need to increase the zoning quite frankly if you're wanting to keep on board with demands for housing. For those who are in detached properties, hold on to those as long as you can. They're not making any more of them in Vancouver. They're going to continue to get more and more valuable. Next on the list are basement suites worth more than houses elsewhere. Legal basement suites in Vancouver can rent for more than entire houses in other major Canadian cities. These secondary suites often provide a crucial rental income that help homeowners afford their mortgages. The city has specific guidelines and requirements for legal basement suites, creating a formal market for this housing type. The high value of these suites suites has influenced how new houses are designed and built in the city. Not really sure where they're getting at that last sentence. The high value of these suites has influenced how new houses are designed and built in the city. I mean, just like Laneway houses, a basement suite is a massive tool for people to get into the market. If they're wanting people to get into the market and not having to rent, basement suites are needed. I don't think this is an issue whatsoever when it comes to the gravity of the Vancouver housing market. They are very much needed and welcome to be able to get people into the market. We also know that in terms of these secondary suites, what is going on in the rental market right now in Vancouver and across the board is it's dropping. For myself, I have a couple rentals across Vancouver. For the first time ever, I had a couple months vacancies back in the winter. I have multiple clients who have not been able to fill vacancies for a number that was profitable or working with their numbers and their budget. So like I mentioned in that previous point, with the amount of purpose-built rentals, and there's over 20,000 units under construction in Vancouver right now, it's really starting to soften the rental market. And just like the resale market, if you want it to soften, you got to blast through a lot of units onto the marketplace. So, basement suites, and with, the removal essentially of short-term rental Airbnb in Vancouver, that has made people want to bring their properties to market. We have a bunch of mortgage renewals in 2025 and 2026. People who can't make their new payments, they're bringing those properties to market. A lot of these mom and pop style investors who own a couple properties, they're the ones that are getting a little bit in trouble. But these basement suites, I don't think have any impact to the market whatsoever. As we make our way forward here, global money flows defy local market forces. It says Vancouver's real estate market responds to international investment patterns more than local economic conditions. Foreign investment has historically played a significant role in shaping the city's property values. The implementation of the foreign buyers tax in 2016 demonstrated the market's connection to global capital flows. The market continues to attract international attention despite various cooling measures. So, right now we have a complete foreign buyer ban. It went into 2025 for a period of 2 years. It was extended now into 2027. We're not seeing as much of this global money flowing in like we did because it's just very hard to do so. Or for the most part, most of these people who are international have already had a piece of Vancouver real estate. We know that essentially from 2010 to 2020, there was a massive economic wave that came mostly from the Asian markets into Vancouver. The commentary around what was going to happen from 2020 to 2030 was more of a tech boom, not as high in terms of the amount of money coming in, but people who are going to be having great work in terms of jobs, and a lot of that inflow coming from India instead of Asia. So, the global money flows, and in my last market update, I was looking at some charts, and on the west side of Vancouver and West Vancouver as well, which has been predominantly a place for foreign money, the sales and the movement in those markets has really dropped off. We already know that China's economy is doing very, very poorly. They are in a period of deflation right now. So there's not a lot of movement over there. China has also put in a lot of steps where it's very hard to get money out of the country as well. There's a whole schedule with how you can do that as well. It's not as easy for people just to cash out and come into these Vancouver markets. So I think this argument in terms of global money flows is becoming less and less. We know that Vancouver is an international city. We do depend on it, but I don't think it is one of the main drivers here anymore. This one's interesting. Micro-condos fetch macro prices. Vancouver's property market has spawned a new category of ultra-compact living spaces with apartments barely larger than a hotel room, selling at premium prices. The trend toward micro units has accelerated as developers seek to maximize land use in the densely packed city center. Despite their minimal square footage, these compact homes feature premium materials and sophisticated design elements to attract buyers. So I think they may be taking some news articles from Surrey. Surrey has been building these micro 300 square foot units that are essentially hotel size for quite some time. I haven't really seen it in Vancouver. You're starting to see units that are just under that 500 square foot in the high 400 square foot mark. I haven't seen anything in the low fours or even in the 300 square foot range. So this might be more of a commentary through the lower mainland as a whole. But with these micro condos, people have to shift with the market dynamics as well. Yes, developers are trying to pack in as many units as they can to help with their profit margins. But if, like we talked about, if the median price point for salaries is only so high in Vancouver and people don't want to be paying someone else's mortgages, you have to think sometimes outside the box. So if you bring in smaller units, it can give some people a chance to get into the market as well. But they're hard. I do agree. I wouldn't say they fetch macro prices in terms of premium pricing. I think they will be hard to appreciate. I've had some would-be clients reach out to me trying to sell some of these micro units in Surrey, and they haven't appreciated really much whatsoever. I think if you're buying in these markets, there's not going to be a whole ton of upside and with all that. So I think this is just adding to their article. There's no real substance behind it, but in terms of these micro units, I really don't recommend anyone getting into these. Moving on to parking spots worth small fortunes. Individual parking spaces in downtown Vancouver can sell for prices equivalent to houses in some Canadian towns. Some luxury buildings charge separate pricing for parking spots. That costs around $50,000. The scarcity of parking in dense urban areas have created a separate market for these spaces. The high value of parking spots affects development costs and influences building design. This is definitely an issue. I mean, I've seen parking stalls ask for around $75,000 on pre-sale units. And with what's going on in Vancouver, you think of that South Burrard region where they're putting, 10, 15 towers up. None of them, a lot of these properties now are not even having parkades. They're putting less and less stalls in developments because they want people to be car free. Before, if you had like a 2-bedroom unit or a 3-bedroom unit in a pre-sale, you would get 2 or 3 spots. Sometimes you just get 1. And there is going to be an issue here with parking. So when you're looking, and this is another argument not to buy pre-sale, you get some older buildings. Not only do you get a bigger square footage on the footprint of the build, but you're going to likely have more parking stalls as well. But they are going to be very valuable. We don't have all the infrastructure to be car free. People still want to travel. If you live in Vancouver, the whole premise of being car free doesn't really make sense. People want to live here. Whistler, they want to have access to the beaches. They want to have access, to the Fraser Valley and all these other areas that make Vancouver so beautiful in the surrounding area. So yes, on paper it sounds good to be car free, but it's not really super beneficial for people that want to live here and enjoy that Vancouver lifestyle. If you snowboard, if you surf, if you windsurf up in Squamish, right? So this is going to be an issue as we continue to go on. Parking is going to be a problem. And that's why I've always made sure when I've bought personally to have parking stalls with my units and as well for clients to be able to take advantage of this, because I know if you're an investor, when I rent out my condo units, for example, it is cost plus for those parking spaces. A lot of tenants I found don't even want it. So then I can end up renting my parking space to someone else in the building. So you can bring in some more revenue that way as well. As we continue on here, pre-sale contracts trade like commodities. Contracts for pre-construction condos sometimes trade multiple times before the building is complete. These assignments can sell for significant premiums over the original purchase price. The practice has created a secondary market that operates parallel to the traditional real estate market. Assignment sales have influenced how developers price and market new projects. Yeah, this is complete garbage here. I mean, this has no bearing. It's the complete opposite. This article was written back in 2013-14. 100%. This was another very lucrative market for people out there. But with all the changes that developers have put into place, it's very hard. Some you can't assign whatsoever. If you do assign, you have to give over 5% of the profit or even more depending on what the contract states. So in those early 2000s and before that, you could assign these units. There's no penalties when you would sign the contract. And then developers started to say, hey, where is our piece of the pie? We're going to start taking some of these profits because these buyers are coming in and flipping just pieces of paper, making 6 figures plus on these deals. That is not the case anymore. Assignments are hard. On assignments, you also have to pay the 5% GST. Some people aren't aware of that. So if you're looking at buying an assignment, if it hasn't been lived in, you got to understand that GST is still applicable on that sale. Assignments, there's a little bit more paperwork involved. You're assuming the contract and it can be tricky. So you want to make sure that you're partnering with someone who understands the assignment market because it's quite different than a regular residential transaction. But in terms of this stating that it can sell for significant premiums over the original purchase price is not true. I have some clients who are trying to assign units, and because the pricing isn't there, the developer is not allowing those properties to even get onto the MLS to advertise because they don't want to set a precedent of where these units have dropped in value to affect the remaining units. And we all know Toronto and Vancouver here, the pre-sale market's hard right now. So this is complete garbage. This has no bearing and no truth whatsoever. Property tax paradox. Some of Vancouver's most expensive properties pay relatively low property taxes due to assessment quirks and tax policies. Historic assessment patterns have created situations where luxury properties pay similar taxes to much more modest homes. The system has led to debates about tax equity and municipal revenue. Various programs and exemptions further complicate the relationship between property values and tax obligations. I have never heard of this whatsoever in terms of these assessed values. We know that once a year, in around December, you'll get your notice of the property assessment, and we all are, or most of us are aware of assessed values, right? It's only used here for tax purposes so that the province and the municipality municipalities know exactly what kind of values associated to your property and how much tax you're going to be paying for the upcoming tax year. Yes, you can go and dispute it if you think your value is too high to try to bring it down. But for the most part, I've never heard of any luxury properties being taxed at the same amount of something that's much lower. So I don't even have a comment to this because I've never heard of anything like it with this system. And you can go on BC Assessment online and you can check these assessments, and there's no preferential treatment. You will see properties that are assessed for $20-30 million, and they're going to have to pay their portion with all of that. So I'm not sure about these exemptions that they're talking about. Maybe they're talking about empty homes taxes or something else, and they're getting something mixed on this. But in terms of property taxes, this is incorrect. So as we wrap up everything here, this is why it's so important to be able to go to a proper source to get your information when it comes to the Vancouver real estate market, because there are so many items that do affect the market here, but there's also items here that have no bearing. You can just see in this list of 10, there are many of these issues here that had no bearing on the market whatsoever. The biggest thing here is just supply. That is why the Vancouver market defies logic. We just don't have enough property, and I've done it before in some of my previous videos in terms of where the construction is. We have kind of peaked out in terms of construction in Vancouver. There's been such a huge focus on purpose-built rentals that is taken away from some of this resale stock. So, I've heard some conspiracy theories, and you can hear it even south of the border with BlackRock or some of these items where people think, governments want people to rent so that they can control you. And I'm not going to go into these conspiracy theories and all that. But at the end of the day, it just comes down to supply. There's been such a focus on purpose-built rentals that now, we can see the charts, and I highlight this in some of my other videos, but there's not a lot of properties that are coming back to market. We've hit peak construction levels. In some segments, it's starting to drop. They've been bringing a lot of condos to market, but it's still not enough. Single family has been non-existent. Permits are at 40-50 year lows, and there's been such a focus on these purpose-built rentals that it's starting to take away from some of these other supply to bring to market. So the only way to really change this is for governments to work together on a municipal, provincial, federal level to try to increase investment here for development and bring down the bureaucracy so people can put these projects through and get them up and completed as quickly as possible. Despite global market conditions, Vancouver is still a very popular place to live, and at the end of the day, it is difficult to get in there. But if you're needing some help navigating the market, make sure you book that discovery call with me. 30 minutes, we can strategize, I can hear about your goals, and I would love to help you out and at least give you a place where you can get some factual and true data instead of taking it from CTV, CBC, Global News, or all these articles online that can give you incorrect information about the market. But until the next one, my name is Kyle Mark, your Vancouver Realtor. Whether you're looking to buy, sell, invest, or relocate to my beautiful city, Vancouver, make sure you get in touch with me, and I'll see you on the next one.